So now that we've got through chapter 1, hopefully successfully, we're going to start on chapter 2. Chapter 2 talks about analyzing transactions. Wait a minute, we did that in chapter 1. So what's going to happen is we're going to do the exact same thing in chapter 2 that we did in chapter 1, except we're going to change some things. We're going to add the word debit and credit to the information. So just so we know that when we record transactions, we use accounts. And accounts are basically very similar to what we've seen. So here's what we did in chapter 1. We did this spreadsheet like these. So these accounts up here, the cash, the supplies, the land, the accounts payable, the fees earned, the wage expenses, these are all called accounts. Well, when we start in chapter 2, we're going to have an individual account for each one of these. And what we're going to do is we're going to keep track of all the cash activity. So we'll have one account for cash, we'll have one for each of these. So if we look at this, these are called T accounts, and they look like this because they are T's basically. You put the name up here, so the word cash would go up here. And no matter what, debit is always on the left. So we're going to introduce debit and credit. So debit is always on the left. Credit is always on the right. Now, it says decreases in assets are credit, but that is not necessarily true based upon what type of account. So what you're going to want to do is look at my actual rules of debit and credit. It's listed in this week's material, but we'll talk about it a little bit later in the video. So we're going to look at the cash account. Cash is an asset. So an increase in an asset would be a debit, and a credit would be a decrease in an asset. So no matter what increase or decrease side is, the credit is always on the right, the debit is always on the left. So here's the cash account. The cash is an asset. Any assets are increased by debits. Any assets are decreased by credits. So write this down. Here's something important to write down. Cash. When I get money, I debit cash. Left side. When I get money, I debit cash. When I spend money, I credit cash. Write that down. Get money, debit, spend money, credit. Okay, so these are the letter of the transactions from that spreadsheet. So the A transaction is when I invested $25,000 into my business. B is when I spent $20,000 for land. Apparently C, there was no cash involved. D, I earned money by providing a revenue, so I got money. E, I spent money, I paid bills, I believe, on this one. F, I paid people I owed on account. And H, I paid dividends. So this is called a T account. You don't have to put the letters to the side. This just helps you remember what they were. And to foot and balance the T account, basically you're going to add up this side, then you're going to add up this side separately, and you're going to subtract the small side from the large side. This is all explained on the first sheet of the rules of debit and credit. So this side would be, I don't know, added up, what, 32,500, whatever this adds up, this will be smaller, subtract it from this total, and I have $5,900 cash. Okay, so this is called the T account. In your homework, whenever we're doing anything, we're going to use the T account. Okay, so let's move on. So a chart of accounts is a list of all the different accounts. So we're going to look at the chart of accounts in a minute. And the balance sheet, the different accounts are listed in the order as they appear in the financial statements. And we'll talk about this in a minute. But let's talk about the accounting equation. Here are examples of assets. Remember, I told you in chapter 1, assets are things you own. So these are all things that you possibly could own. Cash is always number 1 on the list, always. Number 2 is always accounts receivable. Accounts receivable is when your customer owes you money. Okay? A prepaid expense is like supplies or other things, and then buildings. So assets are always things that you're owning. So these are the different account names that might be used for the assets. These are the liabilities. These are things that you owe. Accounts payable is always number 1. Accounts payable is always number 1, no matter what. That is when you owe a supplier money. Wages payable, when you owe your employees. Unearned revenue. This is when you get money from a customer before you delivered the product. So it's basically money up front, but you owe the customer if they want it back. Now, the next equation we're going to talk about is the stockholders' equity. So we talked about chapter 1 that common stock or capital stock and retained earnings are account names under the equity umbrella. There's also dividends. Dividends are when I pay you. So there's some other account names. So revenues, here are different types of revenues. These are the account names we might use. This is the category. So fees earned, I told you that for the first 4 chapters, fees earned is going to be our form of revenue, but it could be any one of these types of revenues. So these are just account names that we could use. When you're doing the homework, the book will always tell you what the account names are. You're never going to have to make them up. If you're doing real life, you will have to figure out what the account names should be on your own. And finally, we have expenses. Again, here's a list of sample expenses that we will be using. And so when we put this all together, we're going to see a chart of accounts. So notice they're always listed in balance sheet accounts first, assets, liabilities, equity, and then I will list income statement accounts. So this is always the order they're in. Whenever you do any statements, for the most part where you're listing all of the accounts, you will keep them in chart of accounts order. Now notice they have numbers next to them. So the first number tells me what type of an account it is. So if you're doing something and you don't know what type of account it is, look at the number. So 12 begins with 1. Any number that begins with 1 is an asset. Okay? Any account that begins with number 2 is a liability. 3 is stockholders' equity. 4 is revenue, and 5 are expenses. So no matter what, if you don't know what type of account it is, look at the account number if given to you, and that will tell you that. Okay, this concludes the introduction to the T account and chart of accounts.